प्रॉपर केलं नव्हतं. Students, please rename your names properly. It should be in the format your roll number and then your name. If you're just writing your account number, your details, your phone number, your attendance will not be recorded and you're responsible for your own act. I'm just going to wait for 2 minutes, otherwise, we'll remove you from the meeting. Gauri, your roll number should be first, then your name. Avinash Kaye, rename yourself. Manoj Atpalkar, your seat number, then your name. Manoj, rename yourself. Avinash Kaye, Avinash, we are waiting for your rename. Manoj Atpalkar, rename yourself. Avinash Kaya and Manoj Atpalkar, I'm keeping you in waiting room. Those students who are not ready to understand, they will be kept in waiting room. And their attendance will not be counted. My dear students, it's the last session of the day. Let's start the session and understand the core and most interesting part, the international finance.
सर स्टार्ट करा लेक्चर झाले सगळ्यांचं लॉग इन व्यवस्थित.
झालं ना?
हो
Okay,
सर.
sir.
हो. थँक्यू सर.
Students, we are not here to trouble you, but what our interest is, we are formulating in a particular process. We are designing and discussing the meaning, the concept, and the features about international finance. And we are here to teach you. But if the system is not followed, it will unnecessarily become trouble to everybody. So, what I suggest, please follow the guidelines which is suggested. Second suggestion, we are tracking your attendance. Already, we have started calling you. This is the first day we have called you. From tomorrow onwards, instead of calling you, we'll directly start calling your father and mothers. So if those students are absent, this is a warning for all the absent students. So now let's begin the session about international finance. In last session, we have learned about what is international finance. Globalization is lead to emergence of international finance. It is a branch of economics that studies dynamics of foreign exchange rates and investments. It deals with interaction between two or more currencies. So, in short, the international trade or international finance is supplying money or giving money for whatever the trades we are doing in global level. Now, before I continue, let me just share a whiteboard. I'm not able to start the whiteboard, so let it be. I want to use the whiteboard so that I can elaborate what is actually the international finance is there. Let it be. What I will do is I will just here itself explain you the international finance by using the word file. So let me start the word file. I'll first explain you how the international finance works, and then we'll work for the other contributions. Now, when you're talking about any trade, there is something called a person who is selling the things, and there is something called a person who is buying the things. This buyer can be of two types. He can be your consumer or he can be your customer. In local market, the seller sell the goods and the buyer he will pay the money. So goods are received by buyer and amount is paid to the seller. If he is a consumer, he will use the goods for his own consumptions. But if he is a customer, what he will do is he will further transfer these goods to other person, and he may be the again consumer or customer. So he will give the goods and he will pay the price to the person. So this will be a continuous chain. Now, in international market, this chain has one good quality. Suppose this is my map of India, and this is Indian water next to my country. Beyond that, there are the different waters available, and many countries can float. So when I shipping the goods, when they are in my territorial water, it is not called as import or export. When they cross my territorial water, this distance is normally of 25 nautical miles. One nautical mile is equal to 2.47 kilometers. So if I cross this, it will become international trade. But instead of this, I sell from here, Mr. A, somewhere in a water to Mr. B. It is called as a domestic trade. Or suppose there are two states, Maharashtra and Haryana. It is again domestic trade. When I cross this water, it is called as a international trade. Again, suppose This is an airport and this is a runway. When the plane it get loaded at airport, it start its journey on a runway. When it cross 100 meters, it is considered as international trade. Before this airport, whatever the trade between A, B, C, or D, that is called as domestic trades. If I take example of train, now train has no boundaries. So when I load the goods in the wagon or the compartment and I attach the label for export only, then this thing will be considered as import or export or a global trade. So the international finance plays a crucial role in financing, refinancing, and giving the different solutions for this global trade. When we talk about the international finance, the most important thing is that it involves more than one currency. I may be the Indian person, I'm dealing with Indian rupee. I'm a Singapore person, I'm dealing with Singapore dollars. I'm Chinese person, I'm dealing with Chinese yuan. So the multiple people, multiple culture, and multiple beliefs are identified in this case. So the another feature of international finance is they have multiple currencies, multiple people, and large quantity compared to the domestic trade. One of the great feature of international finance is this trade settlement takes more than the normal period. For example, in India, if I'm going to sell mango, the person will come to my shop, he will get the goods, and he will sell the goods. But when I export the mangoes first reach to that port, they will taste it, whether the pesticides, chemicals, and harmful insects are there. They will verify it. After verify, they will do the process of checking. Then they issue the supplier, and then supplier will do the final payment. So here, the chances of rejections are there. Chances of settlement is lengthy, and the process is hectic and very influencing that making the buyer a troublesome. In domestic trade, we have only two insurance. One is the life insurance, second is non-life insurance. And when I'm dealing with the goods, normally I just trade the goods, so I take the insurance of that truck or my goods. That's it. But when I'm dealing with international trade, I need to understand there are multiple trade documents which I need to find out. Why? Because I have marine insurance, I have shipping insurance. So now, what is different with marine and shipping insurance? Shipping insurance is insurance of goods on ship only, whereas marine insurance is from loading the goods on ship till they are dispatched and clear the customs warehouse. I have freight brokers, I have custom agents, I have clearing houses, I have transportations, I have cargo handlers, I have multiple legalities document involves, and so on. So considering all this, the international finance is a very complex. Here, what we observe, the contribution for each player is something different. For example, if you are going to purchase a vegetable in your nearby market and you go for shopping the vegetables, so you know the vendor, you are very used to talk to that vendor. Sometimes 10 rupees or less or 5 rupees extra. That person will, okay, sir, बाद में दे देना. But in international market, the rules are changing very fast. It's very vibrant. In international market, we observe they are always changing, having high risk, and they are certainly depend upon variety of risk, which is more than the domestic markets. They are exposed to the advantage of globalization as well as challenges of globalization. Now, what is advantage and challenges? The first advantage of globalization is large players, large funds, large access, and more stringent norms. Whereas challenges, or I can say more limitations, is you do not know the person who is importing your goods, the person who is taking your products, whether he will pay or no. So risk is more, identification and personalization is less, and more, the transportation cost or duration of operational cycle is too heavy. The beauty of international finance is the foreign exchange involved in international finance is more. As we say, international finance, here we are dealing in more than one currency. We are not only considering one currency, but we are dealing and understanding how the different currencies are floating, how the exchanges are done, and what are the advantage and limitations of that currency. Now, when I talk about the foreign exchange risk, the risk associated in international business is first risk about the payment because normally letter of credit or bank guarantee or bond is issued. But again, encashing that bond, it certainly depends upon political risk, technical risk, and socio-economical risk. For example, I have very good relations with Qatar and I'm exporting goods to Qatar, but that goods will pass to Hormuz. Hormuz, there is a war between Iran and US. Then I'm not sure whether my products are reached to the Qatar. If I'm very unfortunate and they are being looted in journey, then nobody will going to pay me. So I'm taking a risk. Second, I'm dealing in suppose American dollar. Now, to be very precise, during the war of Iran and US, those students who have visited the Shell Petroleum, you can see the normal diesel is available at Indian petrol pumps is from 98 to 100 rupees. But at Shell, the diesel was costing 132 rupees. Why diesel was costlier? Because it has more transportation cost more than the Indian companies. Why? Because they have the exchange risk, they have transportation risk, they have imperfection practice what they are following, and that's why the prices were more. The international market is a market of large volumes, large trades, and multiple buyers and sellers, which are sitting in remote places across the globe. So, considering this, it is called as imperfect market. Why it is imperfect? Because there is no single supplier, there is no single buyer. There are multiple suppliers, multiple buyers, but they work mostly in cartel way. Now, what is a cartel? Cartel means they have the unions, they have the association. Like in India, we call Mathadi Kamgar Sangatna, or we call some XYZ trade union, Rickshawala union, truck union, or something. So there are cartels, and these cartels are nothing but oil producing company. Sorry, oil producing countries. The cartel is called OPEC. The milk producing company countries, they have different cartels. So the market is capitalized over the oligopoly culture where the cartels and trade relations are making an impact regarding how and what process I'm doing. The last but the important feature of international trade that instead of my capacity of performance, it is mostly affected by how the political relations and government is operating in international trade. If the government is stable, if government is happy, only single party government is there, then in these nations, the decisions are fast. I having very less stress about unforeseen events. But if you take example, for example, you are exporting to China, and we're not so friendly about China. A issue of bargaining or issue of exchange start with China, then Chinese importer person may make my payment or may delay my payment or may cancel my payment. In all these scenarios, what happens? My payment is get challenged. My payment becomes an issue, and that's why it become a threat. If suppose I give an example of Venezuela government, Venezuela and the US, they have the organization about drugs. So if I'm exporting some medicines from Venezuela to Moscow via US, it is always cross-checked in confusion whether I'm involved in malpractice. If I'm dealing with oil and I do not bind by rule of international OPEC organization, then I may be considered as ignorant and whatever the products I'm publishing, they are being targeted. So, in short, international finance is branch of economics which applies the financial laws, financial rules, financial processes to interact and settle the different transactions between intermediaries, sellers, buyers, producers, and end users or customers, and its related money. So, what are the features? High risk, imperfect market, large volume of trade, more than one currency, and very complex. So, this is a nature of international trade. Now, let's understand the scope of international trade. When we say scope, it normally talks about where, when, why, and how the international finance plays a vital role. As I said, international finance has key terms to define about when I'm dealing with forex market. I to talk about foreign exchange. I to talk about foreign shipping. I to talk about the supplements, and I to talk about the different terminologies which is not normal. For example, if I am shipping the goods from Pune to Mumbai, what things I'll do? I will appoint the person, load the goods. He will clear the Octran payments and challans, GST payments. He will reach to the foreign, sorry, Mumbai. He will check the documents, check the quality, unload the goods, make the payment. The transaction is finished. But in international trade, I cannot guarantee the system defined, system said is always followed. It becomes very complex, and that's why the scope of international finance is again a complex in nature. In international finance, there are predefined systems and structures, but they has a limitation that these structures and systems are altered as per the convenience of intermediaries and as per the people who are participating in trade compliances. So there is no fixed procedure or method which is adopted for the international trade. So let's talk about international trade. We'll divide this in two parts. One, we'll talk about international institutions. Now, this we're going to discuss in later part more detail. So, one is the institution and second is the service. So, I'll go with the service first. The first service is bill discounting, factoring, hire purchase, and lease financing. So, in short, I can say how I'm helping the encashment of my export is the first service offered. Now, what is bill discounting? Suppose is Mr. A is supplying goods to Mr. B. The credit period is of 30 days. So if the A required money, he cannot get money from B for 30 days. So I'm blocked for 30 days. So what I'll do, whatever the acceptance note I am being received, I am being getting from the buyer, I will approach to the bank. I will tell them that the money is going to be received after 30 days. So I will hand over the bank my bills receive note. They will give me money. Suppose the bill is of 100 rupees. The bank will deduct their charges, suppose 10, and the bank will transfer 90 rupees to me. So I will receive the money. And this is called bill discounting. At the time of maturity, after 30 days, I don't worry about the bill. Bank himself will approach to the B and just tell the B, okay, this is your bill. They are discounted with the bank. Now you start paying the amount and they will collect the 100 rupees from the sale. So this is the bill discounting. Now what is the factoring? Now in bill discounting, I'm doing one bill, two bill, three bill, and four bill. But if the multiple bills are there, what I can do is, suppose I am person A having 100 or 200 bills. One is due on first, second due on fifth, third is due on 10th, then other done on 20th, and so on. So the bill payment dates are large. So I cannot understand when and how I can make the payments because each due date I have to approach the customer, remind him that he has to pay the money, I have to collect the payment and close the accounts. So what I'll do is I'll find out one common day, which is the average, suppose 15th of day. On 15th, I'll approach to a bank which is doing the factoring service for me. Now, what is a factoring service? Factoring service indicates that instead of multiple bills, I can discount these bills to one bank and the bank will work on similar nature. They will reduce their fees and pay the remaining money to me. Now, what factoring will do? They will collect these bills and on each due date, they will do the follow up and collect the charges from buyers. The third is hire purchase. Hire purchase means I am purchasing the goods with hypothecation. I can be a guarantor or hypothecation charge or the asset will be given. And lease financing means giving the loans on a longer term. So it's a long-term loans. So when I'm trading with the international finance market, as I already told you, its buying and selling cycle is a much larger period. So for this period, the supplier is always in crunch of exports. So if I need a money, I can use the financing, international financing for my purpose, and that will be helpful to me. So the first thing is fundraising and supplying funds. Second is managing the funds and services where I have credit rating, custodian, merchant banking, and merger acquisition services. In case of merchant banking, these are specialized banks which provides the service of financing, refinancing short-term capitals to the different buyers and suppliers for their trade. Whereas the credit rating agencies are the different agencies which will assess the risk of the person with your dealing. Suppose I'm supplying to the unknown person in Germany. I cannot go in Germany and check where you're living, what is your Form 16, whether you have paid the taxes. So instead of me going there, these credit rating agencies, they will just do the credit assessment of that person and they will decide whether that person is actually a good person or a bad person. And based on these ratings, I can take a call whether I should transact or not. Because sometimes on global level, the people are cheating that they will accept the products, but they will not release the payment. Or there are for or shell companies. So these credit rating agencies can work as a protection for my frauds. The next service is available about custodian. Custodians is like they are taking possession of goods in international market till the payment is done. So they are working as an agent for me. I am the owner sitting in India. My product are going in Singapore. I cannot go in Singapore and just say, 10 रुपए दे दो मैं आपका माल दे दूंगा. No, I need to have somebody who will work as my agent. He will collect the payments, and after collecting payments, he will do the paperwork on my behalf and settle the transaction. Then what are other services? Other services are international monetary system where I have the payment gateways and exchange mechanism for more than one currency. I have the mechanism about transport, endorse, and calculate the risk, provide the consultancy in all this. So forex market, exchange system, the financial gateways is another service provided by the international market, and these are part of international financial management. Now let's talk about the institutions. The most and important institution in international finance is International Monetary Fund. India is founder member of International Monetary Fund. What is International Monetary Fund? Actually, this is a pool of money contributed by 127 countries, and these countries together use this pool of money for their development purpose. So they are acting like a mutual fund. But the beauty of this fund is when you are taking money, you can take the money in your own currency or dollars. And while returning the money, you can return the money in your own currency. So influence or use of dollar is minimized. I do not require to worry about how much dollar I'm having, how much dollar I require. I can transact in my own currency. The use of International Monetary Fund is to get the finance and refinance for various development activities in member countries. It provides consultancy and advice about the risky factors and risk-prone areas. The World Bank is actually divided into two. One is IBRD and second is IDA. IBRD stands for International Bank for Reconstruction and Development, whereas IDA it stands for International Development Agency. IBRD holds the money which you are going to transact and deal for financing the turnkey projects. Turnkey means they are the larger projects having a great duration and more amounts involved. So they will provide the loans to the central governments or state governments of different countries. They will provide the loans for mega projects and they'll work as intermediary in international dispute on consultancy charges basis. Whereas the second part of International World Bank is IDA, that is International Development Agency. This agency is more about a consultancy role. which offers service like guidance, advice, and protection of your interest while dealing with the buyers and sellers. The third and foremost is World Trade Organization. Now, as name suggests, this is a common forum in international financial market where dispute resolve or dispute settle mechanism is possible. This World Trade Organization is a supportive instrument to the World Bank where the financial transactions are settled down and the bargains about are crucially closed while dealing the international financial market. The last major organization, I'm not saying last, I'm just saying as per your syllabus, the last organization is International Finance Corporation. So finance corporations are the again pool of money contributed by private sector and core banking people for generating the alternatives for financing and refinancing the various requirements regarding export and import trade. So this is the scope of international finance as service and scope as institution. Anyone has any doubt, they can put in chat box. I'll wait for 1 minute.
All good, sir.
So I guess no doubts. Let's move further. What is importance of international finance? My one genuine question. I get my salary. So whatever the salary I'm getting, it is called as income. This income is further divided into consumption, saving, and investment. The consumption is divided into three. One is protection, second is speculation, and third is survival, or we can say transaction. So when I receive any income, it has three divisions. Now, what is the difference between saving and investment? The saving is that part which I keep in liquidate form with me. I'm not circulating in cycle of finance. Whereas when I purposefully book some amount for getting some additional returns, it is called as a investment. In saving also we get a rate of interest, but it is very negligible. So considering the same, the saving and investment is divided. So international finance again plays a vital role all this. How to buy the goods in global level? I require money. There is international finance. Settle down the financial transactions. I require international finance. If I want to buy the cheap and quality goods from another nation, I require international finance. If I want to communicate or plan for future growth, I require international finance. So basically, income, consumption, and saving on global level is managed, helped, and practiced by different theories, principles, and philosophies of international finance. So I'm not going minor details. Just to highlight the major importance, it is a discipline and it is a tool to determine what is exchange rates. It helps to extend your domestic trade into an international trade. It try to integrate the economic of various countries and interact them in a capital allocation way where the sharing of information and sharing of trust is facilitated. It provides different mechanisms for trade and dispute settlement. So this was the scope of international finance. To summarize our scope and nature, international finance is a complex market. It always runs and operates in multi-domain sector. It has issues and challenges about number of people contributing, number of activities, number of currencies, and number of people who's having interest in international market. So I'll take a pause of 1 minute. If any doubt, please put in chat box. So no doubts. So let's begin with the next part, globalization of world economies. Now, what is globalization? All of you have gone through this word that we are globalizing, and globalization. So, what is globalization? Anybody know the meaning of globalization? To be a global, it simply means making yourself in artificial world available, accessible, and approachable for any person of any country in any language and for any reason. In India, we follow the structure of LPG. Anybody know the meaning of LPG? We have followed liberalization, second privatization, and then we are approached to something called as a globalization. So anybody remember the model of LPG? The model of LPG is started from 1965. When we got independence, we are having limited companies, and government was controlling the market till 1965. In 1965, we shifted our focus from agriculture to the agro-process industries, cottage industries, small-scale industries, and so on. In 1990s, when Manmohan Singh was there, we were in need of international exchange because we need to finance our energy resource requirements. And that time, we were missing the foreign exchange which is required to purchase the goods. That time, Manmohan Singh was visiting the many countries for helping to get the foreign exchange. So we got the opportunity and forex from UK, where we deposited the gold, and on that mortgage we collected the dollars, which we convert and use for getting our energy resources. So that time we initiated the commitment that we will do the liberalization of our economy. Now, what is liberalization? Earlier, if I want to start any shop, any business, there is a list of documents and list of process which I need to follow. So people was not allowed as openly to trade, purchase, sale. I need to follow certain documents, certain procedures, certain laws, and then I'm being allowed to do the business. So the first thing in liberalization is one window. You want 10 permissions, just sign one document, you get a permission. Before to that, if I want the permissions, I need to approach 5 to 10, 15, 13 departments, talk to 10, 20 people, approach them for 1 or 2 months. Then they will, if happy, they will issue me the license. So licensing was prevailing in India from 1951 to 1990. So the 40 years we are protecting our economy and not allowing liberalized terms. After 1999, we have supported the second gear, that is the privatization. Now, most of you are traveling from expressway, Pune Nagar Highway, Pune Nashik Highway. There you find toll is there. So it is called build, recover, and handover. So private people are doing partnership. So many companies now, even the ammunition production, the many people are shifted toward the private companies like Mahindra, Tata, Maruti. They are supplying some armored vehicles. Some companies are making ammunition. Some companies are making weapons. Some companies are involved in R&D, and they are helping. So the second phase was started as privatization. In privatization, the companies are given freedom to contribute to development. Like before liberalization, only 28 sectors was allowed for general public to start their company. In privatization, now only 22 sectors are reserved with government, where only government can start the business. So it become in reverse way. And that's why this has extended a benchmark or a base where India was initiated the support and motivated all people to go for the global level. And this helps for globalization. And what is actual globalization? The globalization talks about a full freedom to all the participants, commuters, dealers, and different people when they are dealing in international trade. They should talk about the full authority to decide price, decide exchange rate, decide the quantity and the quality what they are dealing with. So this is the LPG model. And now we are discussing globalization of world economies. Any doubt in LPG model? I'll wait for 1 minute. You can unmute and ask, or you can put in chat box. Any doubts?
No, sir.
I consider no doubts. So let's move further. The International Monetary Fund defines economic globalization as historical process driven by innovation and technology involving increased integration of global economies through the movement of goods, service, and capital across the borders. So, to just define in more proper way, if I say the world earlier it was scattered, and when I make them form interconnected, it is called as globalization. We are using integration of the technology, innovation. We are having integration of goods and service and capital. So they are sharing their excess things, abilities, and benefits. And this way, the integration of technology, integration of capital, integration of goods, integration of services has created the world as small. The best example, now if you want to talk to your friend in US, can you just make a WhatsApp call? I can. 10 years back, when the scenario was different, I used to go to STD booth, book the STD call, wait for other person's ability, make the call by international charges, pay, and then speak. Now you got mobiles, you got WhatsApps, and you got ISD calling facility. So you can just directly call from your place to any place. And this innovation has reduced efforts to recognize and understand the person with whom you are trading. I want to send the money to my son who is studying in US. Earlier, I used to go to State Bank of India or currency chest, I need to make an application to Treasury. They will issue the draft. That draft I have to courier to the US. He will go to the US Treasury. He will deposit that draft and he used to get the money. So it was a time consuming. Now I want to shift the money from Pune to UK, UK to Singapore, Singapore to Australia. Just using the electronic service, I can merely transfer the money. If I want to shift, I want to analyze and understand the different approach, the system, the method, the process, and the technology is helping the global world to come shorter distance. Earlier we were walking, now we start running. We start using horse and bullock cart. Now we are in the era of super planes, we're era of bullet trains, and the distance is becoming shorter. World is coming close, close, and close. The people are getting connected, and this is a globalization. I hope the meaning of globalization is clear. In short, minimizing the distance, differences, and barriers of interaction, exchange, and communication is a globalization. According to International Monetary Fund, the percentage of world GDP from 42 has increased to 62 in the duration of 22 years. Why this is possible? Because we have changed the currency exchange, we have changed the internet technology, we have changed the communication channels, we have changed the risk assessment profiles, and this has led to shift the focus from local to global, and that local to global is promoted the international global market, and that is called as globalization. So speed, frequency, volume is more and more transacted over the periods, and this has recognized as a process of globalization. So this is all about globalization and on. Till now, any doubt? I'll just wait 1 minute. You can unmute or you can post in chat box. Anybody has any doubt? Okay. Thank you for response. Now let's move to understand what is the financial globalization. The financial globalization is a cross-border trade where the service and integration of different facilities is amalgamated together to provide quick exchange and availability of funds to all the person who are in need of money. Now, what are benefits of globalization? Globalization is supported by four factors: innovation, speed, institutions, and ease of operations. And same things are benefits of financial globalization. They make you available the funds as and when required. They will reduce the technicalities and asset lockings where the interest and fraud are minimized. They provide alternative channels to circulate the excess capital. For example, 10 years back, suppose the State Bank India in working 10 to 4. After 4, they are not being using their deposits for money creation. They can go to the Indian money market and trade there till 7:30. But after that, the market is closed, everything is closed. But the globalization has benefited that now the 7:30 the market in India is closed, the market in other countries open. So instead of keeping just in my locker or deposits, I can create the hypothecation charges of SEM and do the manipulation and use that money. So this is a benefit of globalization. So flow of currency, capital adequacy, counter striking the financial crisis, and managing the risk and safeguarding all the people is facilitated by globalization. Now, I think it's 9 a.m., so it's too late. We'll stop for the day. Next session, we'll talk about positive effects of globalization. We are to discuss about negative effect of globalization, goals of international finance, and emerging challenges. After that, we'll start discussing about the process of globalization, and then we'll start our first institution, that is International Monetary Funds. So thank you all of you for being part of this meeting.
Thank you, sir.